Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. This is the midweek edition. We are recording on Tuesday night, the 22nd. We are in Globex. It's 9 o'clock Eastern time. Today's show, we're going to talk about change. We're looking for change, right? We've come through a major time window, Rebel Yell cycle hit. And so on this show, we're going to look at the markets and point out things that are changing. My name is Ben Maldonado, and as always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing good, doing good.
Are you feeling like a change of pace?
Yeah, I'm feeling like a little change. It's due for a change.
Yeah.
Yeah.
Well, let's dive right into it because this is the speed show. We go very fast, as many markets as we can, and in this market, this show, we're going to highlight changes in markets. So,
Yeah. If you haven't seen the show from Friday, I would highly recommend, catching that because we have more time to kind of get into the indices a little bit more, a lot more
mhm.
details in there. And a lot of the levels we carry over. It's the same chart. So, all right. So the story is the change here we're expecting. The big thing was a couple of weeks ago we were telling you guys, hey, there's a big cycle change that's happening, and that was going to hit really by Monday.
Yeah.
And we were looking to see how to get positioned and what we can see in the markets. Now, going into that, so that's one, it's in the background. So going into that, you can see we've been up here 6 days, and it's just not some random spot. We're exactly up 90 degrees from the low. It's a critical spot, right? 90 is it's a very important resistant level. Well, and you can see why, because we ran up into it and that was it. We've been sort of going sideways ever since then.
Mhm.
And that level is 58.92. We really haven't been able to, one of our things is indicators of strength is to see if the market can get above and stay above these key levels. Here, we haven't been able to do that. We've been sort of in it, which doesn't make things easier. Nonetheless, it's on the level clearly. And what that means is it's not as strong. Let's just face the facts here.
Mhm.
Right, Ben?
No, that's right. It's if it can't get on top and stay on top, it's just not that strong.
Yeah. I mean, of course, it could change the character a little later, but up to now, if it was really strong, it would get on top, like we saw on the cash chart, some of the other squares earlier, like the last couple of weeks, like when we broke here on some of the other charts, he got up and
Hmm.
stayed on top. So we couldn't do that. And now we're sort of quasi kind of forming a little triangle here. And on top of that, the reason I wanted to start with this chart is we have really good timing. We have 72 by 90 square is price and time. So 90 by 72. And then we have 45 from this low to high. And that's, the 45 is considered sort of a blow off kind of a move. Although this is not too blow offy as far as the
Right.
look goes. I mean, this looks more blow off kind of a leg than this, but nonetheless, it's 45. Okay. We're 45 and we
And
are
it's
about,
roughly 45 too
yes. Yeah.
on in price.
Yeah.
Yeah.
Well, yeah. It's 5/8, which is actually
Yeah.
really important level. 5/8 of the square. That's what we're talking about. So these gray
Yeah.
squares you guys see are an eighth. So, well, here we are. Let's see what's going to happen. What are we looking for the next few days? And I think it's going to be kind of critical no matter what. So so we're going to look at that piece by piece and see how things weigh in. So to start off with, we're stuck here at 90. And while we're being stuck, and if you notice, we didn't really have any good time counts on this day or the next one or on the 17th. We come around to the 22nd, we have the 45 click in, right? 45 degrees.
Mhm.
The
Mhm.
72 came in on the 18th. All right. So 18th, 19th, we went lower. And when the 45 came in on that day, we're even lower, right? If you look at these last three bars, we have lower lows. Yeah.
Yep.
Yep. Okay. So that's what we have to go with. That's not, imagination. That's just we're just reading what's on the chart. I would say we do have good squares. I think we squared out a number of times. Rule is the same. You guys have seen it. Let's do this in other charts. And the reason we can catch these highs and lows and is because we kind of stick to the same rules. So it's easy to read the charts. Once these squares came in on time, first the 72 and now the 45, we really have to expect the market to trade lower. Okay, I think the probability is on the lower side.
Hmm.
And I would say, as long as we're below, let's say 58.92 basis the daily, I'm favoring the downside. Unless we settle above 58.92, then at that point we'll figure it out like we always do. What do you think, Ben?
Straightforward.
Straightforward. All right, let's
Yep.
go. Let's just take a quick look at, well, the cash chart. Basically, this is the SPX, and 58.48 is the 90 degrees up from the August low. And we have the same time counts. Again, cash is stuck in the pretty much the same situation. We tried to get up there a couple of days, tried to hold above, just really couldn't, and ended up, the key thing to notice, if you guys know how close we watch inside bars. We had the bar next to the high bar was an inside bar, and we took out the low, and the rule. And after that, we had we had another. So we had basically 2 days making lower lows after the inside bar got taken out, after the timing. Okay, so these are all, sort of we're going through the checklist. And we haven't really been able to get above and hold above. We have timing coming in. We did the 90. Again, we're expecting some kind of a change. So we opened up with talking about change. So change can be expected at these full square levels, and very often just as much at the 50% level. So this is one of them. Let's take a look at the Dow futures. Now, this is super interesting. Now, if we go 225 here, before I go there, let me just change something just so you guys can see.
It's failing at the half square, isn't it?
Right. So 225 is here. You can see we were right under it. Then we tried to get above, and we're sort of failing, right?
Hmm.
I mean, we're starting to pull back. So there's another 50% of a square. And these, if you look at the basic chart, you can see they don't show up that often. And you can see why we talk about these 50% levels. I mean, I know we talk about this often, but I just can't hammer it enough. If you go back to
Right.
March, you can see how 50% played such a big role. You can see how the 90, you can see why we respect this 90. Look at this, what happened for these 6-7 months.
Amazing.
So,
Yep.
and then once we cleared it, moved higher again. Here's the next touch.
Hmm.
Where do we end up after that? Well, 180, two
Yep.
shots, two tries, false break,
Back to the half.
back to the half, back to the 90. Then, this, we were looking for a low, higher low, came up, higher low. Then we knew, this is going to go higher. Next time we went up next quarter. Anyway, you guys see what happened. And before this last run, you can see we came and tapped 180 again. And when it does that and takes off, it's usually a pretty good sign that we're going to go up to the 50% at least. And we did that, and we're starting to roll over. All right.
Mhm.
So looking at the Dow through the 90-degree squares, you can see we clearly hit an area of resistance, and key thing is we're below 90 degrees here. Right, Ben?
Mhm.
So
Yep.
that's that. This is a 216 chart. This is the one we switched between both. So I'll just leave it at the 90 because we have the 225 up here, and that timing, and we also have timing coming off that low on the daily chart, and that's on October 28th.
Mhm.
We're getting close to it, at least by the end of the week, right?
Yeah, for
All
sure.
right. The key thing here is and this box that I had drawn up,
Right.
and
Resistance.
yeah, this was sort of our target for this run up, and you can see we got there about almost to half. So technically, we got to the resistance level, and we're starting to turn down. And that when you draw the box up, you just never know when it gets there, right? It could have gotten here during this drive up. It could be in this drive, that drive, but it just happens we get here now when all these other counts are lining up. We get the rebel yell kicking in. There's a way it all kind of hems everything in, and that
Mhm.
part is happening. And we talked about this. So let's take a quick look at the 30-minute. And if you guys are active traders, so we post this every day, and Ben posts hourlies and different charts. So if you guys trade the indices, follow us on X. Links are in the description, and this will really help you to at least frame how these markets are moving, at least, and from our perspective. Where we left everybody with 5902, right, Ben, last week? Yeah,
Yeah, that was the big one.
that was a big one. And 5902 didn't disappoint, man. 21st, we tried to dip, come up in here, couldn't do it, failed. And Monday, I said, if we can get stuck below this is really not a good sign. And sure enough, we got stuck below, took out 58.86, went lower, almost to 58.58, which we almost forgot about because it's been a while since we got down here. So there's 58.58, which is, if you guys know, it's a quarter of the square. And there's something going on with this 58.86, and I'm kind of using it as almost like a mean reversion point now, and it seems to be working. So let's see how it wraps around that. But the key one to watch is this 59.02 level, and if we really can't get above that, and we fail 58.86, I would expect next run down to take out 58.58 and possibly testing 58.14. And we'll see what happens from there.
What's interesting, Barry, is if you look from Thursday, Friday when we made that high, and we had all the time counts, we had the Rebel Yell cycle on the 19th. Look at what the market started doing. It's starting to make lower highs and lower lows.
Yeah. It's starting to.
And if you look left, you see all we did was make higher highs and higher lows coming into it.
Exactly. The pivot happened right after pretty much where this arrow is.
Yeah.
Right. I mean, that was that false break on the 17th. And after that, it's all down. And I drew out this channel. Can you see this channel line?
Yeah, we can see it.
So let's see how it happens. I mean, this morning, I thought we'd go up and tap it, maybe test 58.58. I think there was enough gamma in the air to hold it up, and we floated back up, and now we're wrapping around here. So going into the next few days, really watch. You really can't leave this. If price isn't going to leave it. So hey, 59.02 is a level. If we can't get above and we start getting stuck below 58.86, when I say stuck is really where we go below and retest fails.
Right.
We can definitely expect here, and I wouldn't expect the market to stop at 58.58. It'll probably get down to 58, maybe 58.14, 5800, and slipping that 57.67 is down here. And that was a big area that we talked about, back in early October. We really worked at levels. So now they're good support. So we'll watch for that. And we are spending a lot of time talking about the downside because timing seems to be in place. That's why. And we can, of course, turn on a dime if 59.02 is taken out. So
that's right.
That's kind of how we have to frame things. All right. The next, I just have two charts I want to look at. The other one is this one. It's just as important, right?
Oh yeah, that's a good one
for timing. And here, it's a perfect, really good square. I mean, if you want to go by square, it's square and a half by 2 squares. There's 108 weeks by 144 degrees. Really good number for a square out. And here we are, and this whole circle business is just, that's just accessorizing the whole thing. Really, it's right. Really for looks in a way, but it's geometry, and we don't really, you can't really trade just with a circle, but it's definitely there to, geometry holds certain patterns that have very predictable outcomes, and catching a market that's really that has good traction on a circle has very predictable, outcome. So we're looking for it to run up into the circle, and then at some point, right in here is where normally markets terminate. We're starting to go vertical, just about. We started this week, and between this week, next 2 weeks is the business here because this is a weekly chart. And I have the upper 59.50 was the old upper boundary, and anywhere in here is okay. If we're really going to blow through, we could get up into this little shady area, which is, I call these out on the Friday, so you guys can check that. Anyway, that I just want to show you this. So why are we a little bit concerned and talking about downsides and counts and squares? It's because we're coming into one of these key points. And you can see, naturally, every time we got close to one of these levels, the market had a pretty decent reaction. Definitely trade worthy, even if it's a 1 month move. I mean, even if it's 2 weeks, it's great. But here, we've had a pretty good reaction off the 50%, good reaction coming off of the test. Now we're,
Hmm.
really pushing up into the 44. The question is, are we going to push into the 44 and stop, or are we going to go to 180? But I feel like this because it has all the traction and everything put together. This looks like we should have some kind of a move off of here.
Hmm.
And because the circle is about acceleration, so that could be expected. So that's why we're watching with the, putting all this stuff on a short leash, especially like we're watching 5902. If it gets above that, then we're going to reassess and maybe trade it up, if it's going to decide to go up. But for now, what we have is we have the Rebel Yell cycle. We have other counts that came in right in this area,
Hmm.
and the market is acting acting like it. So we just have to go with it. And that's my S&P wrap.
Excellent.
Is that good?
Excellent.
Is that we covered
Yeah,
everything, right?
we got everything.
All right. Important stuff. I'm just gonna hop through the couple of other markets, and then what are you gonna cover today, Ben? What are you gonna look
I
at?
was just going to cover NQs.
Okay, NQ is good. All right, let me hop through a couple more because a lot of markets are doing this thing that you talked about, change.
Yes.
So
Change for sure.
let's take a look at that. And normally in the way we look at charts, change, you can anticipate change when we're close to these key levels on a square or
Hmm.
halves, right? And we don't,
Yep.
obviously the square can be divided into eights and you can really get nitty gritty with this, but we kind of only look at the really main levels. Here are the bonds. We've been, I don't know if you guys remember, but I called out this high. I said we have a 180 high to high. We got a 135, 315. I
Hmm.
said, look, when these things come in, it's rare that the cycle doesn't kick into place. Remember that, Ben?
Absolutely.
And sure enough, we held for a couple of days, and we even have like a three
False
mini drive,
break.
yeah, false break, and a 3 mini drive kind of a look pattern too, very tight.
Hmm.
It's better on a shorter term. But anyway, we got down to 124, which was like our key level to cut the ropes, I guess, kind of. So
Yeah.
we held above it a couple of days. You guys, if you guys been watching, the story. We broke the trend line. We got through 124. We were expecting lower prices, and there was a ABCD. Then we called out and said, "Look, if the ABCD goes, we're definitely going down here to check." Sure enough, all those things happened, and we finally got to the 45 degrees up from the low in October. Now, this is a key point,
E
right?
spot.
Really,
Yep.
really important point. The story now is, can we, is that it? Are we going to recover, or are we going to go a little bit lower? Now, if you look at the high, we're a little bit off, coming off the highs quite didn't reach the 90, right? So this not 45 is okay. I like the 45 because you can see the 50% work really well. If we can't hold here, I think the next reasonable thing to expect is 45 degrees down, which would come in here a little bit lower, maybe around 116, right, Ben? Right about there.
Hmm. Hmm.
And that would come up and test this low that we got from 180. And this is where the trend line starts. So that low will be tested. That could be tested easily. We can watch that. That's if we slip past this. We haven't really given up the level. You can see the body of the bar is still on the line. And that being the case, if anytime, I mean, one of the rules, not a rule really, something that works often is if the body is in the line on a degree line and we're looking for the breakout, often you just wait for one of the other side to get taken out, right? If tomorrow lows get taken out, we can expect it to go lower. Highs get taken out, we can expect it to maybe have another bounce. Okay. But I don't feel like this is a completion of the leg because we quite didn't do 45. So a little lower makes sense. All right, Ben?
It's in a critical spot, that's for sure.
Yes. And looking weaker. And we have
Hmm.
the target for the next downside. All right. The next thing we've been dancing around with, it's a crude. And I've about had it. Let's get going, right?
Yeah, but look at the change. Look at that bar
Yeah,
today.
absolutely. Absolutely. So the change here is, we came down right into the cycle.
Yep.
Sure enough, what do we have on Monday? We have an inside bar.
Inside bar.
And what do we trade today? Taking out the high and boom.
Yes.
So
Right.
that's directional. And hopefully, if this is, and we also, on the weekend show, we talked about the trend line. We talked about, if this holds, so, Ben, I think you remember saying, we're making, hey, it's not so bad. We're making higher lows, right?
Higher lows. Yeah.
So obviously the next stop is 73.50. And I feel like if we get up there this time, we ought to probably hold above it and we'll have to deal with it. So we're looking for higher prices in oil and hopefully take out 73.50 and settle above, which would set us up for the next leg. All right. And we also have a pretty decent ABCD setting up, but I'm not going to put it in just yet.
Right.
All right. Gold. There you go. I mean, do I even have to say anything?
I mean, the change here is acceleration, right? It just didn't, the cycle has not stopped it. We just keep pushing.
Yeah, here it's moving. The change actually happened once we took out the 216 where we got stuck. This was a square
Yeah.
out, right? Squared out.
Yep.
And it consolidated and eventually when I did a quarter square correction, which is just about a perfect. And we started to move. We were wondering if it's going to make a lower high or break out. Sure enough, broke out, and that's it. Now we're back on the game.
Mm-hmm.
And the upside, we covered gold pretty well on the weekend show, last show. So 28.40 seems reasonable. That seems like the next place to visit. Dollar.
More strength.
How do you like that, man?
Mm-hmm.
Talk about. I mean, we call these things out every week, and I hope you guys are making some good use of it.
Right.
This 120, we called out the time. We were looking for, also it came down to our price level, right in this. We had a level right in here between 99.50 and 150. Anyway, we started moving higher. This was the key level we were watching for change and at least to shift the into the next upper side of the box, right? Upper square, which we did, and now we're just rocking it. And we talked about a lot of this in the last one, just to show you guys that we're in a very strong trend. And the dollar, where everybody was in a panic down here, now it's like nobody can get enough. Amazing.
Right.
And what's amazing is how we had this big resistance level, and we just kind of starting to slice through it fairly strong. So let's see what comes up in the next few days. But if we can just go through, let's say 104, 75, 80 with ease, boy, I think that we have a lot more to go. And on the other side, any corrections, at this point, anything above 102.75 is very bullish. That's just how I would look at that. Euro, USD, 108 was our level.
Starting to get below 108.
There we go. That's the change. It held above, and here it held above. Now we're starting to lose it. So if we lose it this time, it's really going to go. What I mean by that is going to go below this. And so there you go, guys. Doesn't mean it's not going to go down, in 2 days, but you can see how the euro moves. So, but long as we're below 108, it's really weak, and that's kind of what we have to expect. Quick tap on natural gas. Well, we've had this trend line forever. We have the channel in there, and what else can I say other than we're bottoming process? Ben, you've looked at the monthlies and the weeklies, and oh my God, like this is the level, right? This is the area.
That is the area.
It's 150 to 180. This area is prime. So, like a lot of these commodity markets, let it bottom out, and we'll deal with it on the other side. Copper is looking good. Corrections holding nicely. 430 is the level. And long as we're holding above that, it's fine. We covered more on copper on the Friday show, so you guys can catch that. Hang Seng is, I think, considering the move we had, and you look at where it's holding, this is pretty damn good. It's pretty robust. And I feel like long as we're above 2380, that level, we can move higher and challenge the 50% level. I don't know how long it'll take, but it definitely looks strong above that, right? And the fact that we really didn't stay below that for much, we got bought up right away. See that?
Sure. Yeah.
And I guess we closed the gap here too. So bunch of things happened.
Yeah.
I think, one of the other thing I wanted to cover, if we have time, you let me know, was the user requested charts really quick. And I wanted to talk about, you guys want to see uranium, and we started covering this. I think last time we talked, we were around the 50% level. We were looking for it to move higher. And I drew up the expanding triangle, and here we are, man. We're just about ready to tap the upper end of that.
That's amazing. Yep.
Not bad, huh?
Mm-hmm.
So upper end for CCJ is 62. And and the more important thing is if we can hold above 50, let's say 50.75, man, uranium is settling at a very strong level here. Kind of like how
Sure.
we used to talk about gold,
Yeah.
you know. So
Yep.
there you go. If you guys are in down here, great.
But
Uh,
man, if you tried to break out trade that thing this year, you got killed.
oh, and in this one, yeah. Well, this is that fourth wave that takes all your money you made from this run up, right? I mean, that's
That's
how
true.
we look at it. So,
That's exactly right.
and if this get finishes properly, we might have the fifth left. And
Sure.
remember, this is a weekly chart, guys, so it's pretty good.
Yeah.
Miners, same story. We were very bullish on this.
Yeah.
And
Constructive over that half square, and there they go.
yep, got over this. We were bullish, looking for it to hit 72. Looks like we're on the way. Gold is certainly not hinting at anything else.
No.
Bankers are doing okay, but we can't quite get over the 60. So
Yeah, that's a problem.
it's a little problem. And we did, hold on, let me get the squares here. We did do one square up. We did 90 up,
Mhm.
roughly 90 up. So I would expect it to kind of, if we ran up higher, it means there's a bigger cycle running here. But the fact that we're doing 90 by about 67, maybe banks are going to take a little break and consolidate. So just a heads up on that. You guys wanted to talk, well, yeah, pound USD
Yen.
JPY, same deal. We called out the low. We're looking for it to go up and tap the 50%, and here we are. Didn't take that long. And I even put this chart as a slide for one of the episodes we did, Ben,
Sure.
just to like saying, hey guys, here it is. And
Right.
and now we're just crossing, it's Tuesday, we're crossing the 50% level. Like I said, if we settle above that, we can expect it to go the full 90. And if you guys
Which
want it, well, it's just a high in July high area. And that's about
big,
162.
big move.
Big move, very good. And the stuff is squares are running amazingly. Here's another thing, 10-year, we talked about this, I don't know, a couple of episodes ago, right? A little bit more.
Hmm.
Basically, we were waiting for it to go and tap the 50% level, which more or less I've done. It's 111. So the key there is, that was a decision point. So we want to see if we can hold above that or if we can stall here or break down and go lower. But, if you guys are short in here, this area is not a bad area to cover some because
Yeah,
we could get a bounce off the 50%. 50%
for
has a
sure.
habit of doing that kind of stuff. But you can see the trend line and everything else work perfectly here. And the Russell, last but not least, didn't quite get to the 90, you know.
Mm-mm.
We'll see what happens. And if it can't get and everybody else turns, well, that's not exactly very bullish.
No, it's not.
And you can see the 190 is working amazingly here.
Yeah,
And
it's nice.
the 180, we were very close to a 180 by 90. That squared out, came right back to the 90. You can see how it sat here for a couple of years.
Oh, yeah.
So weekly also, you guys, just in case. And now we came up to the 50% level, got on top, especially this year, and now,
Hmm.
we're at the upper end of it. I'm sure this looks pretty fabulous on a monthly basis, because we have a high, we have a lower high here. We'll have to treat it that way, which means the high in the Russell came in in 2021.
Yep.
And I'm not sure how to explain this, but boy, as far as the squares go, beautiful. Everything worked perfectly. We don't have to figure out, all the ins and outs. We just have to figure out which way to trade. So thank God.
That's exactly right.
That's all we have to do. We'll see how the timing goes. The counts on the other charts count here. So, and we know we have a 45-week run here. If you look at this low, if you move the square over, it moves over to here. So, we did 45 weeks low to high, meaning the run could terminate here, just like we did over here at a 90. It's possible. And that's all I have. Hope you guys liked it.
Excellent.
Yeah, thanks.
Yeah.
That's
The midweek coverage.
midweek. And I don't know, is there anything important else you wanted to talk about, like mentioned, other
Just
than I
and
want to get over to cover the NASDAQ real quick, but just to say,
yeah. No,
okay,
I think what you covered is good.
okay. All right. Get your fancy charts up.
Well, I wanted to show this one because the others we reviewed, pretty thoroughly over the weekend. I mean, this
Right.
is still the key one.
Yes,
right?
exactly.
Is
Yep.
26.25. We're still stuck below it. We've been stuck
Hmm.
below it for 5, 6, 7 days. If we can't get above it, this thing's going to roll over.
That little triangle is going to break.
Yep. And then this trend line, again, we were talking about, I think you have some levels on your shorter stuff as well as I do, like around 20,000 is key.
Mhm.
This one by one is going to come into play if we get some weakness. And if we bust that one by one, we're going down to the full square, which is
Yes.
around 19,150.
Hmm.
And that's an important square, right? It's 270 up from
Yeah.
the, October 22 lows.
Yep. Very important.
So key level up top, 26.25. Got to get up and sit on top of that if this is going to make new highs. We have some interesting counts too. This is, 70, which is
We got
practically
a
a 70.
72 now. I mean,
That's a
this is good.
72 right
Yeah.
there,
Mhm.
right there. Just low to high,
38.
72.
And you get the
Uh,
45. I mean, that 38 could be a 45 degrees in solar degrees,
correct.
and
So
36 is in there too. So
yep. So you have and this, this 90, this 95 could be a 90 high to high
96, 96 is good.
or a
72.
96. Yep. So there we have timing counts and we have rebel yell cycle. I mean, we got it all in here
And price, you
that
get the half square.
and they got the half square that we're stuck below. The
There's a lot
change
there.
here is if either we're going to get above or we're going to get stuck below, and then the change is we're going to move. This sideways is going to finish.
Mm.
So be aware of that and
And it's
keep
funny
your
if you
eyes
take
open.
I just noticed if you not count the low there where you start the 70 count
Hmm.
and you go to the higher low right next to it, you know how I sometimes
Yeah, yeah, here.
phantom one.
Yep.
Okay, if you go from there, that to the high is 90 degrees.
There you go.
So we did a 90 from there.
Hmm.
So I think measurement wise, things are kind of in place.
It's pretty good.
Yeah.
Pretty good.
Mhm.
So that's it for the NQs. You got the levels. Let me just show you one last thing and then we'll be done. This little update.
Oh, yeah.
Gold is trying to poke through the dome, right? Trying
Mhm.
to
You need a
poke
bigger
through.
square there, Ben.
Yeah.
Bigger
If
circle.
if yeah, if we don't make it, we're gonna have to watch this 2667. But right now it looks like it could be an acceleration
Yeah.
that we could push through. And this is a monthly, so the monthly bar hasn't printed yet.
But that looks
But
very strong, doesn't it? When a market does
yeah,
that, it just breaks right
yeah.
through the circle, right?
I mean, as you know, this is the midweek update, so it's a quick thing. That's all I got. The key
Mhm.
thing to watch is watch for change. Watch for changes in structure, watch for changes in price character, in market action, price action. All these things will be clues to the effect of the cycles. The timing's there. We know we got a good window. Now it's up to us to figure out, okay, how does it affect these markets? Great job, Barry. I know it's a lightning round and it's late on a Tuesday, but I hope everybody enjoys it and we'll talk to you on Friday.
Thanks, Ben. Good job. It was yeah, it was a fun round, right? It's good for us to go through this too, just to keep it, keep everything fresh. So
Absolutely.
it's very good. All right. See you guys on Friday. Have a great week. Bye, Ben.
Take care.
Ciao.